Welcome to my channel. Today's class is about the meaning of accounting. For plus 1, plus 2, accountancy part 1 and part 2 and entrepreneurship development for plus 1 and plus 2 classes are available on our channel. So from this day onwards, I will move on to the plus 1 accountancy. So first of all, we'll discuss about the meaning of accounting. In 1941, the American Institute of Certified Public Accountants (AICPA) had defined accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions and events which are in part at least of a financial character and interpreting the results thereof. With greater economic development resulting in the changing role of accounting, its scope became broader. In 1966, the American Accounting Association (AAA) defined accounting as the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of information. Accounting can be defined in simple manner as the process of identifying, measuring, recording, and communicating the required information related to the economic events of an organization to the interested users of such information. In order to appreciate the exact nature of accounting, we must understand the following relevant aspects of the definition, that is, economic events, identification, measurement, recording, and communication, and organization and interested users of information. First of all, we will move on to what we mean by economic events. Business organizations involves economic events. An economic event is known as the happening of a consequence of a business organization which consists of transactions which are measurable in monetary terms. For example, purchase of machinery. When we purchase machinery, the amount of machinery can be, we can calculate the amount of machinery, or it can be measured in monetary terms. And also, installing and keeping it ready for manufacturing is an event which comprises number of financial transactions such as buying a machine, transporting of machine, site preparation for installation of machine, expenditure incurred on its installation, and trial runs. So economic events, what is known as economic events, means those events which can be measured in monetary terms. If an event involves transactions between an outsider and an organization, these are known as the external events. For example, sale of merchandise to the customers, purchase of materials from the suppliers. These are external transactions. That is, the transactions that are not taking place in our organization. Customers is an outside party, suppliers is an outside party. Suppliers are those who supply materials to our organization. These are the external parties, and the transactions related to those external parties is known as the external events. An internal event is an economic event that occurs entirely between the internal wings of an enterprise. Example, supply of raw materials or components by the store department to manufacturing department, payment of wages to the employees, etc. So these all transactions are taking place internally within the organization. So it's known as the internal events. Now, identification, measurement, recording, and communication. First of all, identification. It means determining what transactions is to record. We do not have to record all the transactions. It involves observing activities and selecting those events which are considered of financial character and related to the organization. For example, the value of human resources, changes in managerial policies, or appointment of personnel are important, but none of these are recorded in the books of accounts. So identification means what? Identifying what all transactions should be recorded. So only those transactions that can be measured in terms of money are recorded. Then second thing is measurement. It means a quantification of business transactions into financial terms by using monetary units. That is measuring of if we purchase a machinery, what is the amount, or we are measuring how much amount is we have given for purchasing that machinery in rupees, paisa as a measuring unit. Then recording. Once economic events are identified and measured in financial terms, these are recorded in the books of accounts in monetary terms. There are certain accounting books. Now these accounting transactions are done in the accounting softwares. The early days for recording transactions, books are used. Now it's in the softwares. It's recorded into softwares. Recording the so these are recorded in the transactions are recorded in monetary terms and in a chronological order. Chronological order means what? It means the first transaction comes first, then the second transaction. Likewise, date-wise recording of transactions will be there. Recording is done in a manner that the necessary financial information is summarized as well as per the well-established practice, and it's made available as and when required. So earlier in the definition uh, we have seen some summarization is done. Summarization thing is done. So summarization means we have to summarize from the transaction. We have to from this after recording all this transaction, we have to summarize how much profit is acquired during 1 year or 1 month period, or how much loss is occurred. That is the summarization. So these transitions are recorded in the manner so that we can easily summarize the results. Then communication. The economic events are identified, measured and recorded in order that the pertinent information is generated and communicated in certain form to the management and other internal and external users. So these we record these transactions so that they can be made available to internal and external users whenever they are needed. Organization. Organization refers to the enterprise, whether for profit or not for profit motive. There are organizations which are made for gaining profit, or there are organizations not for getting profit, like educational institutions, charitable societies. Like they are education institutions, they get profits, but they are stated in accounting terms. We are stating it as a not for profit organization. Service organizations are known as the not for profit organizations. Depending upon the size of activities and the level of business operations, it can be a sole proprietor concern. Sole proprietor concern means what? One person is owning the enterprise. Partnership firm, two or more persons. Then cooperative society, local authority, municipal corporation, or any association of persons. So organizations, there are so many organizations. Then interesting uses of information. Accounting is the means by which financial information about the business enterprise is communicated and is called the language of the business. Accounting is known as the language of the business. Like English language, like Malayalam language, accounting is the language of the business. Means what? Business related business, we can by looking onto the accounts, we can understand about what is happening in a particular business. So it is for communicating about the business related aspects to the parties interested in it. Many users need financial information in order to make important decisions. These users are classified into two categories, that is the internal users and external users. Internal users includes the chief executives, financial officers, president, vice president, Likewise, so many persons who are inside the organization. External users means the suppliers, the income tax authority. Likewise, they are the external users. So those persons who are interested, or they want the accounting figures of an organization, is known as the interested users of information, accounting information. So now we can move on to the first definition that I have stated in the earlier. There is the I stated definition. There is the American Institute of Certified Public Accountants. There is the definition states like that. It's an accounting is an art of recording. So it's a recording, as I discussed above. It's a recording process. These transactions, these money related transactions, we record in the proper areas. In the accounting software, there is certain areas for recording transactions group wise. Then this the classification, after recording, this classification is made. Classify means similar transactions are classified into separate groups. Then summarization. So as I stated earlier, after recording and classifying all the transactions, we have to summarize what is happening in the company, whether it is getting the company is getting in the profit or loss. So in a significant manner in terms of money transactions. So all the money related transactions are recorded, which are part at least of financial character and interpreting the results thereof. So what is meant by accounting? So accounting is just a language of the business and it's used for recording, classifying and communicating several informations to external and internal users of the business who are interested in the business aspects of our organization. Hope you get it. Thank you.